please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Udayan Mukherjee now joins us. Udayan, good morning. So, good going for the market. We have now recovered more than 50% of the overall correction. And now there's some positive news on the monsoon front as well. You reckon this is perhaps market putting the correction behind and now making a move back towards all-time highs? Or is it too early to take that call?
Too early, I would say, Anuj, to make that call. There is a little danger of extrapolation in that analysis. At 9,900, we were all talking about much lower levels, and at 10,500, 600, now we hear a lot of talk about getting back to new highs. It may happen. As you know, momentum is a strange thing, and it can really take you to levels which you don't expect. But my sense is that, we've spoken about it the last couple of times, that after the disastrous February and March series, we were due for a pullback. I thought the pullback would bring us back to 10,500, 10,600 kind of levels. But it would surprise me that if the market went on to significantly higher levels than 10,600 odd from here on. So I would say we've probably seen the best of the pullback rally already. We'll probably extend it by another 100 odd points from here on. If I were long at 10,000, 10,100, I would seriously consider taking some profits off the table right now. I know there are bits of positive news which have started floating around that often coincides with a smart pullback in the market. So I would say we are probably in the last 1 or 2% of this pullback rally. It would be surprising if we extended it. The one thing which might lead on to extend it, though, is that I hear a lot of consensus about 10,600 being the intermediate top for this market. And since everybody is talking about it, it is conceivable that the market breaks it once just to wrong foot people and traders. But I doubt whether it will be a sustainable one.
Okay. Good morning, Udayan. But what about monsoons? Doesn't it normally help break resistances? Well, you never know, a surprise in the Karnataka polls.
Depends on what you mean by a surprise. People who can be surprised both ways by the results depending on what they're expecting. But if you are hinting that the BJP, contrary to some of the reports earlier, would go on to win Karnataka, that would certainly be a bigger boost to sentiment in my book, given how the markets are positioned than the monsoons. I'm not a big fan of thinking that the monsoons make or break markets. A normal monsoon is par for the course. It will help probably a few stocks. Maybe the absence of a normal monsoon might have been a bit of a deterrent, but I don't think that's as big an issue as we like to think. Politics is this year. There's no getting away from that. So Karnataka, I think, will be a key thing to watch in May. But my sense still would be that the global factors would be larger than the local factors in determining if this pullback is more durable than we are thinking it is and takes us to 10,800, 10,900 kind of levels over the next few weeks. I think partly earnings, partly Karnataka, but largely global in determining whether we still have legs from here on.
Okay, well, for now, the market is settling with a gain of about 35 odd points on the Nifty. Don't lose sight of what's happening with some of these new listings. Mishra Dhatu has seen some serious fund buying. Yesterday, it was up almost 15-16%. Today, in pre-opening, it's up about 7 odd percent and gained just about 35% this week already. Udayan, hi, good morning. What did you make of the Infosys numbers? More importantly, with the scaling down of their margin guidance, the sense that you get is that this could be a new normal, lower profitability in the IT space because of the way these guys are transitioning more towards digital services. How would you move? How would you approach the stock now?
I think it would become a range-bound stock, Sonia, because, I think IT is a sector which, despite fairly tepid growth, as you saw in the fourth quarter, people are reluctant to skip the boat right now. A, it's defensive. B, there is a suspicion or a hint that maybe the worst is behind and gradually, ever so gradually, growth will pick up. So this is not the time to get out of the sector. So I don't see major selling in Infosys from here on. I think the lows are there for the stock, have been made in the last many months. And it'll probably find some support around that 1100 kind of level. Having said that, given the 6 to 8% guidance, the margin compression guidance, and the fact that we'll probably have tepid single-digit earnings growth in FY19 again, I don't see too much upside above 1200 either, because, you know, for a single-digit earnings stock to trade at more than 17, 18 PE is a bit lofty. So I think the stock will probably be trapped in a 100 rupee kind of a range between 1100 and 1200. But there's a bigger point about the Infosys earnings. I think you'll find that as the year rolls along, people might, you know, Infosys FY19 earnings expectations were around 71 rupees. And now I see more people talking about 67, 68 rupees. So, you know, if some of these large index heavyweights start scaling down their EPS forecast this early in the year by 3-4%, I don't know how we are going to get that 24% earnings growth, because you're banking on some of these sectors not disappointing, because the disappointment will come inevitably from financials, pharmaceuticals, telecom, etc. Now, even if the delivering sectors start to slip up, I think you will find that at the end of this quarter, you may see that the analysts are beginning to pare down their fairly aggressive FY19 estimates already.
Okay, Udayan, the other thing which has really stood out is consumption's been the first sector to go back to its previous highs. You know, the likes of Britannia, Jubilant, I mean, you can just go on, white good companies, select auto companies. Your thoughts on this space now?
You know, Anuj, if there's one sector which can lead us, it will be consumption. I mean, regardless of valuations. I know valuations are extended there, but the conviction in earnings and earnings growth is also fairly high. And if there's one sector which is showing you, for whatever reason, I mean, rural or general consumption demand recovering after the lull of demonetization and the GST blip, you know, people's conviction in the consumption theme in India is very high. So, I mean, you can't argue with that. I mean, if that is one space which has to give us some serious returns going forward and even extend P multiples from their very high levels, it probably is consumption. So, no argument on that. I'm just feeling a bit disappointed about how some of these stocks within the fancied sectors are beginning to slip off, like Tata Motors within the auto space is beginning to slip off. And despite the sectoral index stretching into new highs, some stocks are actually forming new lows. So I think the intra-sector position of many of these outperforming sectors is also quite interesting to watch.
Okay, just coming back to you in a minute, Udayan, we'll first have to get the 9-10 call from Ashwini. And Ashwini, if it starts here, okay, Ashwini can't hear us. Okay, Sudarshan, to you, if the first trade on the, if the first number on the Nifty is 10,550 thereabouts, what is the Nifty trade?
Oh, the trade would be to wait for a sharp correction, and that should come during the day. Somewhere around 10,500 for Nifty futures would be my buy. But I would only look to buy on a dip. There is no short selling.
Okay. All right. You know, then the question I wanted to ask you is about NBFCs. Is there a renewed tailwind? I mean, the corporate banks, be they private or public, are, you know, similarly under strain for the next couple of quarters because of rules and because of their own doing. And, you know, there is this monsoon call as well. So, fresh tailwinds, you think? And, of course, bond yields have also fallen.
They have fallen, but they did claw back a little bit last week, if I'm not mistaken. Over the last few days, I think they've recovered about 20-25 basis points. But that was the starting point of the NBFC recovery, the bond yield slip. Monsoon helps some of them specifically, so, I mean, you could have to choose a little bit. But, you know, the kind of momentum you're seeing once again in some of these, even housing finance kind of names, I think it is... a lot of investors are saying maybe the correction is done in NBFCs. The bond yield goes into a trading range right now. We will not see the peaks that we saw immediately. So maybe that part of the bad news is in the price. And selectively, demand is starting to recover or will recover in some of the NBFC pockets. And they will grab market share, as you say correctly, from some of these floundering public sector banks, which is a theme which they have benefited from enormously over the last 2 or 3 years and will continue to over the next year or two. So, and these stocks had corrected. Many of them have significantly corrected in the mid-cap space. So I'm not surprised that a combination of these events are seeing some kind of money flowing back. And that's happening in some of the smaller private banks as well, of the likes of RBL, where you're seeing some kind of a recovery coming in after their fairly significant consolidation correction phases.
So how do you negotiate some of these other negative cues we have? Then, you know, Brent at almost $72 a barrel, global trade war fears, etc. Do you think all of this could restrict the medium-term upside in our market?
The medium-term upside is questionable, Sonia. My best guess would be that we will continue to chop around over the next few months. For, I think, elections, the news from there, the global news, which will continue to be volatile. I mean, we have had 3-4 weeks of relative calm. It's a matter of time before the CBOE VIX starts to fly off the handle once again. So I think we'll see more volatility. And if over the next 3 months we come out saying that we basically chopped around in a 10,000 to 10,600, 700 kind of range, I would personally think it's a great outcome for a year with so many challenges. And I think it would be a very, very acceptable scenario if by October we say we actually did not break either side of the trading range.
All right, fair.